Hello, everybody, and welcome to the Plus Three Futures and Commodities Show monthly edition. This is where we're going to review the monthly charts, big picture view, 10,000 foot view, whatever you want to call it. We're going to take a look at what these markets look like when you zoom out and don't get caught up in the sort of day to day or short time frames. It's an exercise, Barry, that you've done your entire career and something that you feel very strongly about, as well as I do, about giving you a view of, what's the background weather for a particular market. Anything else you want to add about the monthlies before we dive in?
Well, absolutely, man. Monthly charts are key, and to keep your head straight, to see where things are going, and the big picture, the bigger trend, and not to get caught up in the day-to-day volatility and whatever the news driven stuff is. It's difficult to kind of fool monthly and weekly charts, unlike hourly or the lower time frames. So
yeah, and as traders, we get caught up in trying to catch every wiggle sometimes, and we miss the big picture. So we find this useful for us, and we hope you guys find it useful too. If you do, please like, subscribe, hit the bell, do all the things that YouTube asks you to do, so we know that the content is valuable. Let's start off with Bitcoin. This has been a fascinating chart to watch and to see develop. And as volatile as Bitcoin is, this chart has done a terrific job of capturing sort of the important levels on a monthly basis. As you can see, it catches the breakouts when we broke out of this initial half square, from 2018 into late 2020. It didn't quite catch the top, but pretty, close enough for government work. And right now, the key thing I'm looking at is that this level here, which is, around the 56.6 area, 56,600. If we get stuck below that, Barry, it may be, time to say, hey, take your bullhorns off and put your bear suit on, because it'll be the first time since, I guess, back in 2017, 2018, that we're actually stuck below a level.
That's right. Yes. Mm-hmm.
So we're watching this. We're watching it develop. Any more weakness, we should find some support here around 43,200. But this 56.6 is super important on any bounces. From a big picture standpoint, if we get stuck below there, it's definitely time to look both ways when crossing the street as far as Bitcoin is concerned.
And you guys can catch the daily update that we did, the weekly update that we did. We cover that. We look at the daily Bitcoin chart. So all the levels are there.
Absolutely, including the spreadsheet, which we'll post a link to. Let's check out the NQs, where the strength has been in the market, and they are at a really interesting spot right now from a monthly basis. As you can see, the move's been straight up. We've done a beautiful job of, when we take a new level, of testing it before we go. This is a pattern you'll see in a lot of different time frames. On a monthly, it's obviously very significant. The low of this month sat right on this bar, which was the power to move it up, tested here, messed around for a few months, got above it, came back, tested it again, the strength to power up, test another level. So far, we haven't been able to hold it. And look at where they closed it on Friday. I mean, we are right on the number, which is around 15,720. So we're going to be watching this very closely. Obviously, the December close, which is, a ways away yet, is going to be critical. But if we can't close above that or sit on top of that, we may see some weakness here. Any other comments you have on the NQs?
Well, just that, as it is, we've reversed the high bar. So definitely heads up time.
Heads up for sure. Let's check the ES monthly. Again, at a very interesting spot. The vertical move, right? Everybody knows the vertical move. Again, I'd point this out because when you're looking at these charts, when you can see these things, it gives you some clues. The low of that month bar on the bar there. launched it up past, got through the half square, went up to the full square, pulled back, didn't even make it back to the full square, but that was again power enough to move it up. And right now the close on Friday is right on the half square here. So
and, yeah, go ahead.
Go ahead.
I was going to say these vertical moves can't go on forever. We look at that line, and they all have to end, eh? So, and we're probably very close to that.
Yeah, one of the things.
How can you sustain that? It's like a water hose pointing you straight up.
Exactly. One of the things that I did on the last monthly is I put in some timing here going backwards, looking backwards from this next timing spot, which is in March of next year. Mm-hmm. And there's some interesting relationships with previous highs and previous lows. So there's a lot of stuff coming together timing wise first quarter next year. Right. And I just noted that on this chart. But again, I think Barry's point about this and the NQs is, this is not sustainable. Something has to happen. Doesn't mean it has to crash, but something has to happen. Do we get sideways for a while? Do we sharp pullback bounce and kind of burn time? Who knows? But
no, we haven't seen any good distribution action in a long time. So maybe it's time for that.
That's a good point.
Some good sideways. So
next one, let's look at the 30-year. This is the 30-year Treasury. And this is an interesting one because we talked about this in the normal video, the weekly video, about how it was looking bullish. And if you look at it on a monthly basis, we've got now 2 straight up bars, 2 months where we have a higher high coming off of this low that perfectly hit a trend line that I had drawn in off of this low here and this low here. Where could we run to? I mean, the obvious point is this next full square up here,
169.
Around the 169 area. And in the daily review that we did on the dailies, and the weeklies, we were looking in that 170 area. So as long as this trend line's holding, this looks pretty bullish for a move into that resistance in 69.70 area. So big correction, broke the downtrend line, and now 2 straight months of higher highs. So bonds are looking fairly bullish. This is the one that's frustrating everybody. It's frustrating the bulls. It's frustrating the bears. And you can see why. We've been caught in this wedge, this declining wedge for, a year and a half now going on. The key thing that I look at when I look at the gold, the longer term, the monthly gold chart, is this entire consolidation, while frustrating and, it's basically burning out sentiment. Like the bulls were off the charts, in all these areas here in these time frames. And recently we're seeing people just throwing the towel saying, forget gold. Gold is dead. Gold doesn't work, which is exactly what you see at the ends of these sort of consolidations. So that's one thing, is we burnt off sentiment, which is good. The other thing is we're basically consolidating and doing this channel on top of the highs from 2011. Mm-hmm. And that's bullish. That's the definition of a bullish chart. Anything else you have to add on this one, Barry?
Well, no, I think we're getting gold covered pretty well. We covered on the weekly, and here it's just a boundary, right? We were in the upper half of the square. It's just a matter of just waiting for the time. It's in a bullish position. I mean, we're just brushing the old highs. We're just sitting there. So
just waiting for the fuse to be lit.
Exactly. And look how it's pushing up against the trend line, right? It's not even coming down to the lower part of the trend. So it's building up some pressure. It's it's that big triangle that we saw on the weekly is compressing. Mm-hmm. That's what, that's in that last few bars. So,
and that energy is going to be released at some point. We just don't know when. So we're on the lookout, watching lower time frames for that. Gold's cousin is silver. And silver's also been doing something similar. It's in a little flatter wedge, as you notice. The correction in gold, was not only time but price. This has mainly been in a sort of burning off time and going sideways. It's a big band, but it's essentially this half square. It's been bouncing up and down for a year and a half. The thing that I look at again is, we're holding above this major breakout that we had out of this, 7-year base on this bar in 2020. And we've been holding that, holding it. That's bullish long-term for a market. We got this wedge, again, a compressing triangle, energy's being built up. The move out of here is going to be big. We don't know whether it's going to be a bullish move or a bearish move, but we do know the current positioning is very bullish. Anything to add on silver?
Well, I think that lower boundary is the key level to watch in the coming days and weeks. And if we can know that and we hold above that, I think it's in a bullish, it's in a good firm grounds to take off.
Yeah, this is in the 20.
As long as we're above that, I think that's a really key level looking back, going all the way back to 2008. So it's a major level we're sitting on.
Yep. Mm-hmm. And that's the kind of chart from a monthly perspective that says, you know what, as long as I'm above this 21 area, odds favor we're going to move higher on a breakout.
Don't look away.
So, don't miss it, right? Because the move should be really, really phenomenal coming out of there. Mm-hmm. Another metal that we've been watching with similar characteristics is copper. And the characteristics that are similar is that this congestion, and you can see even on the monthly, you can see it's forming a triangle here. It's getting wound up tighter and tighter and tighter. And that's occurring on top of the highs we made in 2010, 2011. The ascent is much like the ES and much like NASDAQ, and if you put it on this thing right before it started triangulating, it would look just like that, this move higher. And you see what comes out of that. It either falls out and pulls back, which would, a pullback to here would be completely normal because that's the 2017, 2018 highs, also represents a full square. But mainly this thing's just been winding up and holding well above those highs. So from my view, the monthly chart of copper is again very bullish. What's your view on this one, Barry?
Well, it's very bullish. Again, it took a nice long break, so we'll have to see how it goes from here. But I think as long as we're above that half square, you have to watch it. It's not sleeping. None of these look like they're sleeping. They're all kind of sort of taking a little breather. And so, yeah, I think long as it's above the half square, it's in good shape.
And, a lot of times these breathers are what's needed to cool off the sentiment, because as you can see, after a vertical move like that, there's going to be no bears. Everybody's going to be bullish. Copper's going to 10, all those kinds of things happen when you see a move like that. So these breathers sort of allow that bullishness to wear off and give you the fuel you need to take the next move higher.
Right.
Let's jump and take a look at some of the energy stocks or commodities. Here we've got crude. When we did the weekly video, I talked about the fact that this 61.50 area was crucial for crude. Here's why. It represents where we've bottomed and topped many times over the last few years. Most notably, you got the bottom in August, and you had the recent lows were right on top of that level. The highs in 2019 and 2020 right at that level. The highs in 2015 right at that level. This is a really important spot. Mm-hmm. If crude loses it, you got to figure we're at least going down to test this half square around 48, if not a full square down at 35. I don't think that's likely, but that's what the probabilities would open up that those things happen if we lose this level. So that's how important it is. Also, if you want to put in perspective the big correction, everyone's talking about, oil crashed, it did this, it did that. Essentially, on a monthly, we just did a full square, right? Mm-hmm. We went from the top of the square to the bottom of the square. Mm-hmm. And so now we have a really important level that we can watch and we can gauge and we can help us assess the probabilities based on how price acts around that level. Anything else you see in the crude chart you want to
Well,
point
I
out?
think that 61 is a critical level because it shows up from a lot of unrelated methods, right? Of calculating in geometry. So, and looking at the monthly, you can see why, how it plays that role. Going back, you can see how price always wraps around that.
Yeah, for
And
whatever reason, that level has
Mhm.
been very, very important to crude, for the last 2 decades.
that one and the one below that, right? Those two have been really critical.
Yep,
So
absolutely.
yeah,
Especially defining the lows, and then if you go back, to the early 2000s, it was basically bounding the highs
exactly.
at bottom level.
No, I think 61 is a level to watch for now, at least next week. And yeah, we're good.
Let's take a look at natural gas. Natural gas got its clock cleaned last week. I mean, it was down, I think, 20% on the week. And if you look at it from a monthly perspective, you say, it's not so bad. It's pretty normal correction, right? We were at the top of the square. We tested it for 3 months, couldn't get above. So it's going to come down, and we're going to potentially test this half square here around 368, 370. Doesn't mean it has to go there, but even if it pulls back to there, this is still bullish because look at where this half square is. What price did it define? The highs in 19, the highs in 18, the highs in 17. A lot of price action we've seen about here. And if you go back even further in the 90s, it was also a place where some highs came in.
Mm-hmm.
So while painful if you're long, this kind of correction in a commodity is normal. It doesn't make the bigger picture bearish by any means. We have to see what happens now that we've had this sharp pullback. Can it set a low, go up, make a high, pull back, make a higher low, and then give us a higher high? That's the kind of action we want to see to know that money's coming back into this commodity. Anything else to add on gas?
Well, just that it's on solid ground above that half square. That's really it.
Right. Remains to be bullish. Let's move over and check out some of the grains. Wheat, which has been our favorite grain. You look at this chart, there's nothing wrong with wheat. The only thing we're running into right now is we're running into resistance here at this half square. And we had a bar in November, prices shot up above it. We've since pulled back, and now the high is getting stuck under here. So if we go into some sort of consolidation or correction, it would not be unexpected, and it would not be bearish. Once again, I'll point out that look at the low of this month's bar. You see this signature so many times when you're working with these squares, where you'll break above the square, pull back, the low of the bar stays on top of the square. That's a very, very positive sign. And we got that sign in wheat. Again, notice how the pullback here that we saw stayed on top of all of this price action of the base before the wheat actually broke out. So it's a bullish market. What are your thoughts on wheat?
Well, I think it's bullish. Just have to be patient with the pullbacks and corrections and consolidations, and just stay pointed in the right direction. So far the direction's up, and yeah.
Further up on a big picture, we got to get above that half square. So
that's right.
We're going to be watching that area and watching that.
Yep.
Next one is corn. If you listen to the weekly video, we're very bullish on corn. You look here at the monthly, you can see why. Of course, it had its big breakout, big move up early 2021. It's been correcting all year, and look at what it started to do. This one may end up leading the rest of the grains higher because it's starting to make higher highs on a monthly basis after this sharp pullback. Again, look at the character of this bar. We broke out, closed above the full square. The next bar, that was in November, the low sat on top of the square, and now we're set to move higher. This market looks bullish.
Mm-hmm.
Soybeans. doing something similar to corn. Not as strong because we're still stuck below this half square. And that level's like the 1275 area. So for beans, both on a weekly and a monthly basis, 1275 is critical. To have much more upside and really get things going on the upside, we got to get above that 1275. The thing to notice in this one, like other charts, look at where the lows of this correction are. It's above the consolidation and it's above the 2016 high. That's bullish.
Mm-hmm.
Anything to add on beans?
Well, just to watch it, they're all bullish. They all sort of corrected after the summer, and I just have to keep an eye on the levels to know which way it's moving, right? So here we have that half square to watch. I think that's the key level to watch. And all in all, they're all holding pretty well after the correction, given that, it looks like it's holding pretty well, and they all look firm.
Absolutely. And one of the things, we're going to switch up to the softs now. We'll end with the softs. But before I jump into the softs, one of the things that Barry and I were discussing, I saw in my research for the last 2-3 weeks, was a few weeks ago on our weekly show, I said, something that hasn't happened in a year or more, none of the commodities or very few of the commodities were looking like you could get in them and play them short-term bullishly, on a 4-hour basis or daily basis. And that hadn't happened, as I said, in over a year. Mm-hmm. So what I think's going on is, based on the charts, is that they're in these consolidation phases. They're not bearish. They're correcting, consolidating the big moves that they made, whether it was a year ago, 6 months ago, 9 months ago, whatever the time frame is, and doing some of the cycle work and the trade day, counting the 45s, the 90s, the things that Barry's talked about on the videos. It looks like in general, the next wave up is going to come sometime next spring, May to June timeframe. You're going to start seeing these things, different commodities at different times, making their moves, finishing their consolidations and moving higher. You can't generalize about a market, but from a timings perspective, that's kind of one of the things that's coming out of the charts. As we've talked about, gold and silver look to be ready to go. It's just waiting for the trigger there. Maybe they're going to lead. Maybe they're going to start earlier than the others. Whereas some of the things that just recently made highs may be laggards. It may take a little longer for their corrections to happen. So let's jump into the softs after that side. Mm-hmm. So here on sugar, we see, the major breakout from a base, multi-year base that we saw. The thing I like about sugar, even though it's been going essentially nowhere for the last 3-4 months, is all the price action has been on top of this half square in this about 1860, 1850 area. Again, it's bullish when you look to the left and see, where different highs are, where other price action's been. Look at where the 2006 highs were. Mm-hmm. Look at where on the way down, where the high was here in 2013, 2014. As long as we sit on top of that, it may not be this month, it may not be next month, but somewhere when the time cycles are up and it's ready to go, the next move will be higher. And that's how a lot of these commodities look, including sugar. Anything to add on sugar?
Well, again, we're down to, you see how everything's kind of pulled back to key levels on this during the last few months, right? So I think it's a key thing now is to watch these levels to see if we're going to, levels can hold up and we can get a follow-up move, follow through or not, right? So, mm-hmm. So if the monthlies hold, then normally what we do is just watch the dailies for some kind of an entry signal in that direction.
Absolutely. That's exactly right. We look at the monthlies for the big picture. Is the market in a bullish position? And then we start looking at the dailies for the signal to, hey, it's ready to go. Mm-hmm. And that's the plan. Here's cotton. Cotton recently, which we had a nice winter on, made a big move, and it's beginning to correct. The monthly shows that the previous 3 months there were 3 big up bars, and now we've had a down bar. So the key level that we're going to watch, which I'm sure most people that have been watching this would know, is this full square level. Mm-hmm. And when you look left, you can see why. 2018 highs, 2014 highs, 2013 highs are all in this area. It's around 95.50. As long as we hold above that level, this is a bullish market long term. Mm-hmm. We also have this trend line that, will pick up the price, in a couple months a little higher than that. But cotton looks bullish. Now, does that mean you run out and buy it tomorrow? Because, with this sort of structure, as I said, in a big picture view, the commodities look to be burning off some of this sentiment, burning off some of the, speculative fever and aggressive moves higher that they had, and correcting and consolidating. So cotton is no different than the others. One that's a little different than the others is cocoa. And how is cocoa different? Cocoa really has been going sideways, building this base for about 5 or 6 years. All of the other commodities have broken out of their bases, and this one hasn't yet. We thought we had the move here in October that was going to do it, but then it pulled right back. But a lot like Barry talked about on the weekly video about gold and building up energy and winding up and getting tighter and tighter, you can see the compression happening here in cocoa. And fortunately for us, it's happening right around one of our levels. So we know if this thing gets above this level and can stay on top of it, it's go time. And it's go time from a monthly basis on a multi-year breakout. That is an explosive recipe. Anything else you have on cocoa, Barry?
Well, I think patience is the key here. Mm-hmm. And we'll wait and see. I think, our weekly show, we'll be watching it and we talk about it if it's getting ready. For now, yeah, just holding, and we're still pretty well below that key square there. So I think we can wait on this.
Absolutely. We wait for that square to be broken and then sit on top of that, and that's the go signal.
Right.
The last one is the strongest soft of all, and that's coffee. And you can see from its move, the powerful move that it made recently. And what we think's going on in coffee right now is that, so far we've got an inside bar this month. Wouldn't be surprised if it, sort of digests and consolidates with some sideways action to digest this big move we've seen up so far in 2021. The key level, again, everybody that watches these knows, will be in the 212 area. As long as we stay on top of that area on any pullback, coffee will continue to be a bullish market from a big picture, long-term perspective.
You can see how, November pushed through that, right? After all these years.
Yep. And 2 different tries this year, right? We had the big move up in July, which we caught. Then we had this failed attempt here in October, and then they tried to push it down, and then we got through. Now we're finally sitting on top. Let's see if we get a pullback or the consolidation just flags at this much higher level. Mm-hmm. But as long as we're above these highs, as long as we're on top of this square, this is a market that continues to look bullish.
What's interesting is all of these commodities are holding above key levels, right? They're not in weak positions. Other than cocoa.
Yeah, and what that tells me is that, the bigger picture sort of macro thesis of, hey, this is a commodity super cycle is intact. And until these charts start and these commodities start violating important levels on the monthly basis, from the highest time frame we look at, the wind is at the back. It's very bullish. So this is why we watch these. This is why once a month we try and review them. We're trying something new this week by doing a separate video. So any feedback on that would be appreciated. And I'm excited about the the markets next year and what we're heading into from a bigger picture based on these charts that we're looking at. So we'll keep bringing you this type of content. We'll keep, focusing on not only the sort of tactical shorter term stuff, but the bigger picture view of, what's big money supporting. And clearly the message from these monthly charts is that for now, they're supporting higher prices in the bigger picture.
Mm-hmm.
Anything else you want to add, Barry, before we sign off?
That's it. I think it's a good coverage. And thanks, Ben. It was a good job. I know it's a lot of work to get through these for the show. So you hung in there and got through two shows today.
Yeah, 2 shows in one day is tough, but hopefully the information is good and you guys are able to use it in a manner that helps yourself. And that's the goal, is to provide you guys with information that's helpful. So have a great, since we're talking about the monthlies, have a great month of December, everybody. And we'll obviously talk to you next week on our next installment of the weekly videos. So take care, and Barry, we'll talk soon.
Very good.
All right.
Thanks.
Bye.